Welcome to our accounting class. I remain Dr. Adebayo. Today in accounting, we want to treat interpretations of accounts. And to start with, we have the trading profit loss account and the balance sheet as at 31/12/2018. So we have the items in the trading profit loss account and we have the items in the balance sheet. So the first question says we should calculate the gross profit margin. But in the question, we don't have the gross profit margin, so gross profit. So we need to find the gross profit first. And how do we get the gross profit? Gross profit is sales minus cost of sales. Sales minus cost of sales. So our sales, this is our sales, and this is our cost of sales. This is our cost of sales. So this minus this gives us our gross profit. So now we can get the gross profit. So for gross profit, it's going to be 0, 0, 0, 5, 0. So 305,000. So our gross profit is 305,000. The net profit is gross profit minus expenses. So our expenses is 150,000, and the net profit will be 155,000. That is done. Now we have the first question, which is gross profit margin. To get the gross profit margin, it is gross profit divided by sales multiplied by 100. Our gross profit is 305,000. Our sales is 650,000 multiplied by 100. So our gross profit margin is 23.46%. Now we need to find the asset test ratio. For asset test ratio, it is current asset minus closing inventory divided by current liabilities. So here we have 88,000 minus 30,000 divided by 33,000. So we have 88,000 minus 30,000. That's 58,000. So 58,000 divided by 33,000. So it's 1.75. So that's 1.75. So it's going to be 1.75 ratio 1. 1.75 ratio 1. 1.75 ratio 1. So it's going to be 1.75 ratio 1. I think that is clear. Then we move on to the next one. The period of credit received from trade creditors. So we need to calculate the period of credit received from trade creditors. To calculate that, it is credits divided by credit purchases multiplied by 365. Our credit sales. So to calculate the period of credit, it is creditors divided by credit purchase multiplied by 365. Just come in and sit down, please. The period of credit. Can you close the door? The period of credit purchase. Creditors. You know I'm doing something, just keep quiet, please. Creditors over credit purchase. Multiplied by 365. So our creditors, we have our creditors to be 33,000 divided by credit purchase. Credit purchase is 342,000. 3,000 divided by 342,000. 33,000 divided by 342,000 multiplied by 365. 33,000 times 365 divided by 342,000. So we have 35.2 days. So we have 35 days given to creditors. Given by creditors. Then we have the next one. The rate of stock turnover. For the rate of stock turnover, is cost of sales divided by average stock. Rate of stock turnover. Rate of stock turnover. Cost of sales divided by average stock. And for average stock is opening stock plus closing stock divided by 2. So our opening stock and closing stock, let's go back. The opening stock, our opening stock is stock 33,000. This is 1, and that's 33,000 plus closing stock 30,000 divided by 2. So that's 48,000. So 48,000 divided by 2, that's 24,000. This is 24,000. So our average stock is 24,000. Then our cost of sales. Cost of sales, 345,000. So we have 345,000 divided by 24,000. 345,000 divided by 24,000. So that's 14.4 days. That's 14 days. That's 14 days. What's the next one? It said, explain the following terms: depreciation. When we talk about depreciation, depreciation is the loss in value of an asset over a period of time. So for depreciation, it's the loss in value of an asset over a period of time due to wear and tear. Therefore, shareholders form. We call it shareholders form because this is the amount of money that belongs to the shareholders. And the next one is intangible assets. Why do we call them intangible assets? We call them intangible assets because these assets, they have value, but they cannot be touched. Example is the goodwill. Another example is the reputation of the business. These are intangible assets. And the last one is 7% debentures for 2023 to 2024. Debenture is a long-term loan that has to be paid back by 2023 to 2024, and it has a fixed rate of 7% as interest. So on that note, we end the interpretation of accounts. And remember we said for gross profit, it's sales minus cost of sales. For gross profit margin, it is gross profit divided by the total sales multiplied by 100. And for asset test ratio, it is current asset divided minus closing inventory divided by current liabilities. And for the period of credit, it is always the creditors divided by the credit purchase multiplied by the total number of days, which is 365 days. And for the rate of stock turnover, it's always cost of sales divided by the average stock. And for average stock, it is opening inventory plus closing inventory divided by 2 to get the average stock, and we divide it with the cost of sales. And that's how we get our trade debtors turnover. This is our creditors turnover. The total numbers of days given by our creditors to pay our debts, and this is the total number of days we gave to our debtors to pay back the invoices. On that note, I end the interpretation of accounts, and I remain Dr. Abdulatif Adebayo. Thank you.